Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 5th, 2025, and we're diving into Equitable Holdings' third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Equitable Holdings has released their Q3 2025 results, and there's a lot to unpack, from their net inflows in various segments to the impact of their life reinsurance transaction.
Revenue and profitability overview. Let's start with the financial highlights. Equitable Holdings reported a net loss of $1.3 billion, or 4.47 per share, primarily due to a one-time impact from their life reinsurance transaction. However, their adjusted EPS came in at $1.67, beating the forecast of 161 cents. John, what does this tell us about their performance?
Despite the net loss, the adjusted EPS of 1 per 67 cents, which excludes notable items, indicates strong underlying performance. The company saw significant net inflows of $1.1 billion in retirement and $2.2 billion in wealth management, showcasing robust organic growth. This is a positive sign of their operational strength and market positioning.
Operational efficiencies and future outlook. Equitable Holdings has been proactive in capital management, deploying $1.5 billion to drive shareholder value. This includes $757 million in share buybacks and $500 million in debt repayment. How does this strategy position them for future growth?
The capital deployment strategy is quite strategic. By repurchasing shares and reducing debt, Equitable Holdings is enhancing shareholder value and strengthening their balance sheet. Additionally, the $200 million allocated to growth investments indicates their commitment to expanding their business segments, particularly in wealth management and asset management.
Business segment performance. Let's delve into the performance of their business segments. Retirement assets increased to $171.7 billion, while asset management's AUM reached $860.1 billion. Wealth management also saw a rise in AUA to $118.2 billion. What are the key drivers behind these numbers?
The growth in retirement assets is driven by market performance and net inflows. Asset management's AUM increase is largely due to favorable market conditions and strategic ownership increases in AllianceBernstein. Wealth management's AUA growth is supported by strong advisory net inflows and increased advisor productivity, reflecting their effective client engagement strategies.
Strategic initiatives and market position. Equitable Holdings recently announced the acquisition of Stifel Independent Advisors, which will add significant assets under management. How does this acquisition fit into their broader strategic goals?
The acquisition of Stifel Independent Advisors, with over $9 billion in client assets, is a strategic move to scale their wealth management operations. This aligns with their goal of reaching $1.1 trillion in AUM, a record high for the company. They are also on track to achieve their 2027 financial targets, which include significant net expense savings and increased investment income.
Key takeaways. In summary, Equitable Holdings has demonstrated resilience and strategic foresight in their Q3 2025 results. Despite a net loss, their adjusted EPS exceeded expectations, and their capital deployment strategy is set to drive future growth. Thank you, John, for your insights.
Thank you. Equitable Holdings is well-positioned for long-term success, with strong growth momentum across their business segments. It's an exciting time for the company and its investors.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Equitable Holdings' performance in the comments below.